Hello everyone, this is Gracie here. In this video, we will be discussing about consignment problems. So in our last class, we would have discussed about normal and abnormal loss. So in this videos, we will be discussing about problems on closing stock. So what is closing stock? So closing stock is the must be valued. Closing stock is nothing but if you're doing, first I will explain you what is the meaning of closing stock. Closing stock is the part of unsold goods. For example, you have total stock 10,000. So yours out of 10,000 you were able to sell only 9,000. So the remaining 10,000 minus 9,000 which will give you 1,000 rupees, 1,000 units. So the 1,000 units which is not sold and it is still there in the business is called as closing stock. So how are you going to value it? So here they have given closing stock must be valued at cost price or net realizable value, whichever is less. So the cost price or at the cost at which you're selling that particular stock, whichever is less, you will value it. In case of consignment, so in case of consignment, how are you going to value it? In case of consignment, for the purpose of valuing closing stock, cost price includes the cost of goods to the consignor plus expenses incurred till the goods reach the premises of the consignee, such as packaging, freight, carriage, cartage, insurance in transit. So what happens in case of consignment, how are the goods treated are? The goods treated are is based on classified as non-recurring and recurring expenses. So with the cost of the goods, what is spent, the money which is spent on the goods plus the other expenses which is non-recurring, you will add. So when you add that non-recurring expenses, it will give you the total cost. So here non-recurring expenses includes both the expenses of the consignor as well as consignee. So consignor's expenses includes packing, freight, carriage, cartage. So these are the expenses which is incurred by the consignee. So what are consignor's expenses? Consignor's expenses are all those expenses which is incurred till the goods are reached the premises of the consignee, is known as consignor's non-recurring expenses. So what are consignee's non-recurring expenses? That is packaging, freight, cartage, loading, unloading goods, insurance and transit. All these are consignee's expenses which is called as non-recurring, which will occur only once during the period, not on frequent basis. So these are non-recurring. So why you should know about non-recurring expenses is with the total cost what you have spent on the goods plus these expenses will be added. So you should know recurring and non-recurring because only non-recurring expenses will be added along with the cost price. So as you are adding non-recurring expenses, you should be in a position to analyze what is your recurring and what is your non-recurring expenses. So now the goods have reached the consignee's premises like go down rent, insurance of go down, etc. should not be considered. So what they are stating is any expenses which is incurred by the incurred after the goods have reached the consignee, like in go down rent, insurance of the go down, it should not be considered under non-recurring expenses. Only the expenses till the goods are reached to the premises of a consignee is called as non-recurring expenses. Next, the expenses incurred on the goods till they reach the premises of consignee must be considered irrespective of whether the expenses are incurred by the consignor or consignee. So as we have stated, till the goods reach the premises of consignee must be considered as the expenses incurred by the consignor or consignee. So as we have already we know what are recurring and non-recurring expenses. Based on that, we should be in a position to classify, and only non-recurring expenses will be added to the cost. So when we work out a problem, you will clearly understand. So you will come across problems, calculation of value of closing stock under four conditions. That is four problems, on the four parts you will be solving problems. The first one is without losses. The second one is with normal loss, how are you going to value your closing stock? Then with abnormal loss, how are you going to value your closing stock? With both normal and abnormal loss, how are you going to value your closing stock is what you will be learning in this problem, valuation of closing stock. So now let us get into the first problem. So this is the first problem what we are going to solve. So illustration 12 where it states calculation of value of closing stock without losses. So I have already discussed what is valuation of closing stock. In simple, to brief up what is valuation of closing stock, the cost price of the goods plus expenses, that is nothing but non-recurring expenses incurred by the consignor. When we talk about non-recurring expenses incurred by the consignor, it is the expenses which is met by the consignor till the goods which is reached till the goods reaches the consignee's place of business is called as non-recurring expenses of consignor. As well as you will add non-recurring expenses of consignee. Consignee's non-recurring expenses are other expenses which is incurred for one time, that it is not repetitive in nature. Such expenses are called as non-recurring expenses of consignee. You will add that expenses. When you add that, it will give you the total stock, that total cost of the goods, which is cost of the goods what you're going to sell. So with that cost what you have got, you will find out the value of closing stock. What is closing stock? The unsold goods of the total goods is known as valuation of it's known as closing stock. So I discussed that we will value the closing stock on all the four parts. That is, when losses are not there, when we will solve problems with normal loss, and we will solve problems with abnormal loss. With both normal and abnormal loss problems we will solve. The first one is calculation of value of closing stock without losses. So the first condition, when they are not given us any normal or abnormal loss information, then how are we going to value stock? So in the question what they have stated, Mr. Ram Manohar. Mr. Ram Manohar is who here? Is a consignor. Sent 100 bicycle which cost rupees 900 each to Gopal of Chennai on consignment basis. Ram Manohar paid freight of rupees 1200, cartage of rupees 300 and insurance 400. In Chennai, Gopal has spent rupees 100 as cartage, loading and unloading 50 rupees. Then the bicycles have been kept in godown as at a monthly rent of rupees 100 at the end of accounting period. So 20 bicycles remained unsold. The selling price of the bicycle is rupees 1000 at Chennai. What should be the value of stock which was unsold is what they have asked. So now we will calculate the calculation of closing stock. So what is the calculation of closing stock? Cost of the goods plus non-recurring expenses of the consignor as well as consignee. So here Ram Manohar is a consignor and Gopal is the consignee. Consignor is sending 100 bicycles at a rupees 90 each. So the total cost of the cycles what is sent is cost of goods consigned at rupees 900 each. So how many bicycles? 100 bicycles at rupees 900, which will give you 90,000. So with this we will add non-recurring expenses of consignor first. So what is the non-recurring expenses? The expenses incurred by the consignor till the goods reach the consignee's place are called as non-recurring expenses. So what are the non-recurring expenses? Freight, cartage and insurance, which is incurred by whom? Ram Manohar. So it is the expense which is incurred by Ram Manohar, which is called as non-recurring expenses. So non-recurring expenses of consignor: freight, cartage, insurance. So when you put on 1200 is for freight, cartage 300, insurance 400. So the total non-recurring expenses 1900. With that you will add on non-recurring expenses of consignee. So the consignee's non-recurring expenses are: Gopal has sent 100 as cartage, loading and unloading rupees 50. So Gopal has sent to Ram Manohar stating 100 rupees that he spent on cartage and loading and unloading rupees 50. So this is the expense which is incurred by Gopal when the goods are reached the premises and it is still not got into the premises. So cartage is nothing but bringing the goods from that location to the other location. The vehicle what we use is known as the cartage. So when we are using it is the expense which is incurred by consignee to bring the goods to the premises. So it is still not reached the premises, so that is also called as non-recurring expense which is made by Gopal, and this expense will incurred only only once, only when the goods is sent by the consigner. Next we have loading and unloading. When will loading and unloading happen? When it is loading, it is loading and unloading can be putting the goods into the truck, or from the truck you are unloading the goods to the godown, say anything. So it is nothing but it is a process of delivering goods to the premises. So this cartage as well as loading and unloading will occur only once by the consignee. So it is called as non-recurring expenses. So what is your total non-recurring expense of a consignee? It is for cartage 100, for unloading it is 50. So when you total up, it will give you 150. So the total cost is 90,000 plus non-recurring expenses of consigner 1900. With that you will plus non-recurring expenses of consignee 150. So the total cost is 92,050. So this is the stock value, this is the cost for the total stock. So what is the total bicycle for 100? For 100 bicycle, this is the total cost. So still the question is incomplete. We need to read the question. So if you go back to the question, you have the bicycles have been kept in godown at a monthly rent of rupees 100 at the end of accounting period. So you will ask me, there is 100 rupees as monthly rent. Why shouldn't we add with the expenses? So it is also an expense. Yes, it is also an expense, but it is the godown rent. It is the godown rent which is incurred, and it is a monthly rent which is incurring, which is recurring in nature. So it is an expense which keeps on frequently recurring. So we are only adding the non-recurring expenses. Why we add only non-recurring? Because only non-recurring expenses comes once, that is when the goods are delivered. So along with the cost price, we will add this expenses. So this 100 rupees of godown rent, monthly rent, will not be taken into consideration. Next, so that is why we have not taken into consideration. So our total cost is 92,050. So this 92,050 is what? For 100 bicycles. So what are we going to find out in this problem? They have asked us to find out what should be the value of stock which is unsold. So what did I explain in the beginning of the video? What is unsold closing stock? It is the unsold stock is known as closing stock. The stock which is unsold and which is kept in the business is known as closing stock. So they are asking us to value the stock of unsold. So now we need to know what is the unsold. So in the question, if you read again, 20 bicycles remained unsold. So what they have mentioned, 20 bicycles remains unsold. So how many bicycles did consigner send to consignee? 100. Out of this 100, 20 are unsold. So now through cross multiplication, we'll find out for 20 bicycle what will be the cost. So now we have got here 92,000, which is the value of total goods, that is total bicycle. That is, what is the total bicycle? 100. For 100, if it is 92,050, then for 20 which is unsold, can we find out the value? Yes. How will you find out? The missing by the cross multiplication, which states for 92,000, that is nothing but for 100 bicycle, if the total cost is 92,050, then for 20 bicycle, how much is it? I will just show you the cross multiplication. For 100 bicycles, if the total cost is rupees 92,050, then for 20 bicycles, how much is it? You can easily find out through cross multiplication. So when you are cross multiplying, it will tell you what is the cost for 20 bicycle. So for 20 bicycle, how much is it? Through the cross multiplication. So this is the concept what you will follow, which means is equal to, so how to find out this missing, which is nothing but is equal to 20 into 92,000 divided by 100. So you will multiply 20 into 20, that is nothing but cross multiplication, into 92,050. With this you will divide by 100. So when you divide by 100, you will be getting answer of 18,410. So you will be getting 18,410. 410. So for 20 bicycle, what will be the cost? 18,410 rupees. So this is how you are going to find out the missing value. So you have found out value of closing stock 92,000 into 20 divided by 100, which will give you the value of closing stock 18,410. So this is the value. So I hope you understood how to calculate the value of closing stock. So they've given note here. Go down rent of rupees 100 is incurred after reaching the premises of consignee. Therefore, it should not be considered for the calculation of value of closing stock. So with this problem, we understood if there are losses, how are you going to treat or value the closing stock. This is a very important problem, valuation of closing stock from your consignment chapter. Okay, now let us solve one more problem for you to clearly understand the concept. So in this problem, A sent goods worth rupees 10,000 to B and paid rupees 1,200 for packing and rupees 800 for insurance. So who's A? A is consignor. Who's B? Consignee. What is the worth of the goods? Rupees 10,000. So the cost is given. And paid, that is A sent goods of 10,000 to B and A paid 1,200 for packing and 800 for insurance. So for packing and insurance, so these are the expenses which is incurred by the consignor, and these are the expenses which is incurred by the consignor before the goods are reaching the premises of the consignee. So whatever expenses incurred by the consignor before the goods are reaching to the premises of the consignee are called non-recurring expenses. Either it is insurance or whether anything, it is non-recurring expenses. So this 1,200 packing and 800 for insurance is called as non-recurring expenses. So what we will do, we will add with the cost of goods on consignment. Next, B took the delivery of the goods and paid rupees 2,000 for freight. So now what is happening? B took the delivery of goods. So B is consignee. He took the goods and he paid 2,000 for freight, 400 for cartage and unloading. So these are the expenses which is incurred by the consignee to take the goods from the the place at which the consignor has delivered the goods. So from there he is taking the goods to his godown. So to take the goods he is incurred how much? 2,000. So freight is what will occur only once, and it is the expenses which is incurred by the consignee for the goods to be delivered in the premises. It is not still gone to the premises, but it is an expense which is incurred by consignee for the goods to reach the premises. So that is also non-recurring expenses, right? 2,000 is the non-recurring expenses of consignee. So we will add this as well. Next, rupees 400 for cartage and unloading. Yes, cartage is what the vehicle which is used, or the unloading is for the goods to be taken from the truck or cart and put into the warehouse. So that is also the process before the goods are reaching the premises. Unloading, you should give wages to the people who are unloading the truck. So it is the non-recurring expenses which will occur only once, that is when the goods are sent by the consignor, as well as these are the expenses which is incurred by the consignee before the goods reach the consignee's place. So this is called as non-recurring expense. So next we have one more expense, which is rupees 600 for go down rent. So go down rent is rupees 600. As I've told, rent is something which will incur on monthly basis. So this is for the goods maintained in the consignee's premises, which is recurring in nature. So as it is recurring, we will not consider this in valuation of closing stock. Next, selling expenses. Selling rupees 400 selling expense. It is an expense which is incurred by the consignee. So after the goods are reaching the premises, so that will also not be considered. Next, insurance. Insurance is an expense which is incurred by the consignee, where he should pay insurance premium on frequently basis, and it is incurred by the consignee after the goods are reached the consignee's place. So whatever expenses reaching after the goods are sent to the consignee's place will not be taken into consideration of valuation stock. So we will not take insurance as well. Then at last we have stated we sold 3/4 of the goods for rupees 1,800. So 3/4 of the goods were sold for 1,800 rupees, which states that we sold 3/4 of the goods for 1,800. So 1,800 is the selling price. So what they have asked us to calculate value of closing stock. So how much is the exact units which is sold? 3/4. So 3/4 is sold. So what is the remaining? So total is 3/4. So in 3, 1, assume 1. In 1, if 3/4 is gone, what is the balance? 1/4. 1/4 is remaining. So 1/4 is the unsold value or cost which we are going to find out. First, let us prepare the table. Calculation of value of unsold goods. Cost of goods sent on consignment. The total amount is how much? 10,000. With that, we will add non-recurring expenses of consigner. With that non-recurring expense of consigner, what are the non-recurring expenses? Packing 1,200, insurance 800. So along with that, we will add non-recurring expense of consignee. How much is it? Freight 2,000, cartage 400, and other expenses will not be adding as they are recurring in nature, and it is consignee's expenses after the goods are reached his premises, so we will not consider that. So when we total up cost on goods sent on consignment with the recurring non-recurring expense of consigner and consignee, we will get the total cost of goods which is sold, which is 14,400. This 14,400 is 3/4 of the goods which is sold. So this what they have stated, we sold 3/4 of the goods. So 3/4 of the goods is nothing but 14,400. So in this 14,400, 3/4 is sold. So after this is the total cost, which is 14,400. This is for one. So this is for 100%. So in this 100%, 3/4 is sold, and the remaining what is the cost? 1/4 is not sold. So through that we will analyze. So I will show you the calculation which shows here what they have stated. 3/4 goods were sold. Goods were sold. So now we will assume 1. In this 1, 3/4 is sold. So 3/4 is sold. So what is the balance? So we should find out 1 minus 3/4. So when we take LCM, we will get 4. So it will be 1 into 4 should give you 4 minus 1 into 4 minus 3 into 4. Sorry, 3 into 4 is the denominator for this. So 1 into 4, I'm sorry guys, 3 into 1. So with this, we will divide it by 4. When we are dividing this by 4, so where we'll be getting, we will find LCM. So as you all know what is LCM, 1 minus 3/4. So when you take an LCM of it, you will get 4 as answer. So when you get 4, it is 1 divided by 4, and 3 it is 1 minus 3 divided by 4. So you will multiply. So to get 4 as your denominator for both, 1 4s are 4, and here the denominator is itself is 4. So 4 into 1 will give you 4. And here what will be the denominator? It will be 1 into 4. So to clearly explain you all what is it is. So how did I arrive to this is LCM. You all have learnt in your what schools. So where if it is 1 into 4. So how did you get 1 into 4? So it is nothing but 1 minus 3. So this will be divided by what? So this would be divided by 4. So when this is divided by 4, so now divided by 4. So how will you find out? You need to find out the LCM for it. So when you find out LCM, 4 ones are, so for this will be further classified here, which is nothing but 1. This should be further classified. It is nothing but 1 divided by 4, which is 1 divided by 4 minus, it will be 3 divided by 1 divided by 1 minus minus 3 divided by 4. This is what you're going to do. So now this is 1, you should get denominator as 4. So now what you do, it is 1 minus 3 by 4, isn't it? So the denominator will assume it to be 1. So when you take an LCM, 4 is the LCM. So 1 into 4, denominator is what here? Denominator is what? 1. So 1 is the denominator. So to get 4, because the LCM is 4, so denominator should be what? 4. So to get 4, 1 is assumption. 1 into 4 will give you 4 as a denominator, and 4 into 1 will give you as 4 as denominator. So to get the denominator as same, we are multiplying 1 into 4 here, and the top numerator also will be multiplied by 4. So 1 into 4 minus 3 into 1. So why is it 1? Because the denominator is 4 here. So 4 into 1, numerator also will be 3 into 1. So 1 into 4 minus 3 into 1 divided by 4. So what will you get? What will you get as answer? 4. So your answer will be 4. 1 fours are 4 minus 3 ones are 3. So with this you will divide by what? You will divide it by, what will be your denominator now? Denominator is nothing but, you will get it as, sorry, you will get it as 4. So your denominator is 4. So this is your denominator. So now your denominator is 4. So what will be your answer? Your answer will be is equal to 4 minus 3 is how much? 4 minus 3 is 1. So 1 divided by 4 is your answer. So I hope you all understood how did you all get 1 divided by 4. Got it? Yes, 4 minus 3 divided by 4, which will get 1 divided by 4. So first you will assume 3/4 of the goods were sold. 3/4 of the goods were sold. So 1. So the total cost is 1. So for out of 1, 3/4 is sold. So what is the remaining? You will find the LCM. When you find the LCM, 4. So for 1 there is no denominator. So we will assume for denominator for 1 would be 1. So when you assume 1 as a denominator, LCM will obviously be the highest number, which is 4. So we will multiply to get 4 as denominator on both the sides. We will multiply 1 into 1. 1 fours are 4, 4 ones are 4. So that a denominator will be same. So when you are multiplying 1 into 4, the numerator also will be multiplied by 4. So that is what? 1 into 4 minus 3 into 1 divided by 4, where you are getting denominator for both as 4. When we are getting 4 minus 3, which will give us 1 by 4. So 1 by 4 is the unsold stock. So out of your total worth of the goods, total cost is 14,400, which is for 1%. For 1% it is. So for one number it is. For the full goods is 14,400. In this 14,400 into 1 by 4, which is nothing but the unsold share, unsold fraction. So 14,400 into 1 by 4 will give you 3,600. So the value of goods which is unsold is 3,600. So next, so we will be calculating like this. We will be solving the other problem with the head. We will be calculating valuation of unsold stock with normal loss in transit in the next class. So thank you everyone.